Hey everybody, welcome to Liberty Call. Today is Tuesday, October 10th, 2023. Hope everybody's having a fantastical day out there in the interwebs. I apologize, I'm in the middle of still doing something and I hit the start button a little too soon. So, hey, you get to hang out with me for a second while I get everything ready. Looks like the markets were a little bit in a little bit better mood today. So, just one second while I finish this up. All righty. So like I said, I'm glad you're here. Thank you for being here at the Liberty Call. Today is a beautiful day here in Colorado, and it is sunny and not too hot, but looks like the markets were in a much better mood again today. Lots of green all the way around the globe except for China, unfortunately. But, these things do happen, from time to time, so I wouldn't get too worried about it. But as I said, it is unfortunate that, we're going through all these problems due to what the Fed did to us the last couple of years. But again, it happens. All righty. All right. Well, again, if it is your first time here watching Liberty Call, thank you very much. If you could give me some thumbs up, likes, shares, subscribes, follows, and all that good stuff. Hit the bell so you know when I go live. And let's see, is it almost done? Almost. So just going to be another second while I get everything organized here for my notes and everything else. Copy that over here. You think you're ready to go, and then you just you get too far ahead of yourself, and then these things do happen. All right. Okay, well, let's go ahead and jump into the numbers for today. Let me bring up there we go. All right, so here are the indexes for today. The Dow Jones was up 0.4%, 134 points, closed at 33,739. S&P 500 was up 0.51%, closed at 43.57. NASDAQ up 0.58%, closed at 13,562. The VIX was down 3.79% today. It's down to 1703. Canada was up 1 1/3. Brazil was up 1.42%. And Mexico was up 2.04% for today. Over in Europe, Germany was up 1.95. The UK up 1.82%. France up 2.01. The Netherlands up 1.78. Spain up 2.19. Italy up 2.3. Switzerland up 1.66. And Portugal up 1.99%. Russian exchanges were split today. MOEX up 0.09 and the RTSI down 1.03. And the overnights, starting up the Nikkei in Japan, it was up 2.48%. Australia up 1.01%. New Zealand up 1.49%. In China, the Shanghai was down 0.7. The Shenzhen component down 0.56. China 50 down 0.58. DJ Shanghai down 0.64. And the Hang Seng was up 0.74%. Taiwan weighted was closed for today. All right. So looks like I said, most of the markets were in a fairly good mood today. So that's certainly some good news. And let me go ahead and shrink that down, close. And let's go ahead and get to the market recap for today. All righty. S&P 500 jumps as Treasury yields remain steady on easing bets of a November rate hike. So everyone's hoping and praying that the Fed is going to cease their rate hiking campaign because, 5.5 is just too outrageous for, us normal people. All right. The S&P 500 experienced a notable surge as investors digested comments from Federal Reserve officials suggesting a potential pause on rate hikes next month. Well, end of this month. Atlanta Federal Reserve President Raphael Bostic, emphasizing a wait-and-see approach, expressed the view that many of the 11 rate hikes implemented since March of 22 are yet to fully impact the economy. Bostic, addressing the American Bankers Association, stated that further rate hike increases might be necessary to bring inflation down to the Fed's 2% target. Market expectations align with the sentiment, with about 13% of traders anticipating a Fed rate hike in November. It's the October 31st, November 1st meeting, down from 31% the previous week, according to investing.com's Fed Rate Monitor tool. This echoes similar sentiment from other Fed officials, including Vice Chair Philip Jefferson and Dallas Fed President Lori Logan, who highlighted the tightening of fiscal conditions due to the recent surge in Treasury yields, particularly at the long end of the yield curve. Amid these developments, the Treasury yield curve is gradually unwinding its inversion, alleviating recession concerns. The 2-year rate over the 10-year Treasury narrowed to negative 29 basis points, the lowest since March. Now, I will stop here and talk about, let me bring up just the yield curve in general. So let's bring up another page, and where's the dynamic yield curve? All right, so let's make this a little bigger so we can see this. This is what the yield curve looks like right now. If we zip backwards through time, you can see how it's been inverted going back to about April of 22, and then it was normal, through 21 and most of 20. It was just really low. If we go back to the end of 19, it still says it's normal, but we can see right here, see how the curve goes like this? This gave me a lot of worries back at the end of the fall of 4 years ago at this time. And, it was my hypothesis that we were heading towards bear market recession in the first half of 2020. COVID happened, and then they papered over the economy. So we have no idea whether or not we would have actually gone through that bear market. So anyways, all right, let's bring that off the screen and get back to where we were at. Okay. In the corporate sphere, Microsoft, despite gaining Morgan Stanley's endorsement as a top pick, relinquished some gains. Meanwhile, Planeteer Technologies experienced a more than 1% increase after securing a new U.S. Army contract valued at approximately $250 million. Because great, us taxpayers want to spend more money on the military. Boeing, despite reporting a decline in third quarter jet deliveries due to ongoing production issues with its 737 MAX jets, saw a rise of over 3%, probably because of war. The company also announced the delivery of 1,000 smart bombs to Israel amid escalating tensions with Hamas. Boy, that was fast. They've already sent 1,000 bombs in 2 days. It's amazing. The war, the war people love spending our money on, and make, because they get rich. Lockheed, Raytheon, Boeing, all those. All right. PepsiCo outshone on the earnings stage, surging over 1% after reporting quarterly results that exceeded expectations. The company raised its annual earnings guidance from 12 to 13%, marking the the third consecutive year of double-digit earnings per growth. Truist Financial Corporation led the financial sector higher with a more than 6% rise following reports of discussions to sell its brokerage business to private equity company Stone Point for around $10 billion. This positive momentum in banks coincides with the beginning of the quarterly earnings season, with JP Morgan and other major Wall Street banks set to report later this week. The optimism is further fueled by the unwinding of the inverted yield curve, which benefits banks, leading businesses as longer-term rates rise. Oh, and there was one other thing I wanted to show. Let's zip back over here to the yield curve. So if we go back and these most recent downturns, I'm not really concerned about those. But if we go back to the 2008, 2007 timeframe where we had an inverted curve, you see that the curve actually normalized because it was inverted from, it was flat or inverted from about the end of 2005 when I was doing all my licensing stuff through to about, when did it normalize again? Yeah, it went back normal in August of 07, right before we started the slide. So any articles that you read talking about, hey, well, this is, if it normalizes, that's a really good thing and blah, blah, blah. Well, not always. Unfortunately, the yield curve can normalize and then the carnage can still be behind the scenes and, more to come. So, all right, let's get to our next article here. It comes from Zero Hedge. It's titled Bidenomics, National Debt Increases by Another $500 billion in just 20 days. Yeah, we're headed towards insolvency, folks, so please be prepared. The Biden administration added $500 billion to the national debt in just 20 days, surpassing $33.5 trillion as of October 5th. This sharp increase highlights the rapid pace of borrowing and spending under Bidenomics. In 3 months alone, the debt climbed from $32 trillion to over $33 trillion. To contextualize, the U.S. economy's total output measured by GDP is only $25.46 trillion, meaning the economy would need to grow by 33.5% to cover the national debt. The current national debt exceeds the combined total economies of China, Japan, Germany, and the UK. On an individual level, as of October 10th, every citizen would need to contribute approximately $99,839 to pay off the debt, and every taxpayer is responsible for $258,257. So, because there's only one taxpayer for every 3 citizens. So 2 out of 3 people are getting a free ride. They're the government employees. They're the the people on welfare, and just people who are at the bottom of the income spectrum. The federal government's spending addiction is a major factor contributing to the fiscal situation. In August alone, the Biden administration spent over $527 billion. Despite the economy supposedly being strong, the surge in debt, massive deficits, and declining federal revenue paints a bleak picture. I think if we taxpayers just stop sending in our tax revenue or tax receipts, government will be gone in like 6 months. I mean, do you think these people are going to work for free? I don't. The economic structure heavily relies on debt sustained by fiscal stimulus. The interest expense on the debt is escalating rapidly, with over $630 billion paid in fiscal 2023, surpassing spending on the national defense. The average interest rate on the debt is 2.92% as of August, but is relatively low. But with maturing debt replacing higher yielding bonds, interest payments are set to climb. T-bills are currently about 5.5%. The two-year yield is over 5%, and the 10-year yield is around 4.7%. Interest expenses, constituting over 35% of total tax receipts, could become a top 3 federal expense if interest rates remain elevated and continue to rise. This escalating national debt often... It's not a nation. Sorry. It's a country and a republic. Often overlooked, poses a significant risk, and is described as a ticking time bomb. I would wholeheartedly agree. So plan ahead, folks. All right, last article here comes from Mises Wired. More about spending. Spending more taxpayer money on foreign policy boondoggles has solved nothing. This was written by Jeremy Powell. All right, the government debt in the United States has surged to $1 trillion by $1 trillion in 3 months, reaching a staggering $33.5 trillion as of October 5th. This unprecedented increase, largely attributed to interest expenses, poses. Hang on a second. Let me see here. No, it's a different. Okay. Despite claims of. Did I read this? It's very similar. All right. Well, let me skip down. Let's see here. Despite claims of strong economy, the surge in debt, massive deficits, and declined fiscal revenue signal a precarious situation. The reliance on debt to sustain the economy through fiscal stimulus is noted as a concerning aspect. Interest expenses on the debt are rising rapidly. We already talked about $630 billion this year. The report highlights the fiscal challenges facing the U.S., emphasizing a need for a solution to government spending addiction. Despite the economic strength being portrayed, the underlying structure is described as a house of cards built on debt. The interest expense is poised to become one of the top 3 federal. Yeah, basically, both these articles basically talked about the same thing. So let me see here. Was there anything else? Yeah, basically here, and this was what I wanted to say. The only conclusion I can reach is that handing out more taxpayer money to the third world countries, as well as increasing commitment on the global stage, are all feel-good proposals, but in vain measures. Elsewhere with the progressive narrative, I can assure you that it is permissible to hold on to the fact that Moscow is run by a brutal despot, but the reality is that DC kickstarted events that led to the current invasion in Ukraine. Can't be hidden. Likewise, the blame can't be shoved onto extremism when the policies of the progressive camp are a failure and a waste of taxpayer money. All right, so that was everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.